Welcome to Price Action with Prashant. I am Dr. Prashant Parate. Today I am going to discuss about two types of trade management. First type is de-risking the position and holding remaining position till final target. Second type is pyramiding. Pyramiding can be done when the position is in profit or it can be done when there is loss. We are going to discuss about pyramiding in profit and exiting only when trailing stop loss is hit. Let us see this chart of Bank Nifty where we can do partial booking. So this is 15-minute chart of Bank Nifty spot, and suppose for any reason we think that this is a demand area here and stop loss for that is 50 points approximately. So with this view, if we want to risk 10,000 rupees, we can take 200 quantity, that will be 8 lots. So for risk of 10,000 rupees, one can buy at this point or at this point. There were two entries, stop loss was not hit and prices went up. From here price went up, came down again and again it went up. If we buy here, the risk is very small and probability is slightly lower. In such scenarios, most of the time people advise to do partial booking or de-risking of position. So when we have bought 200 quantity, we can exit 100 quantity. Let us see if it was possible. From here prices went up to 122 points and also from second entry it went up by 120 points. So it was easily possible in this case to book even 2R. That means 100 points profit could have been booked. So suppose we book 100 points profit, then 100 points profit and 100 quantity, that will be 10,000 of profit booking. We had taken risk of 50 points and stop loss was 50 points, but total risk was 10,000 rupees. With partial booking, we have de-risked the position and we have booked 10,000 rupees of profit. Now we are holding just 100 quantity because we have done partial booking. From here next day there was gap up. As there was gap up, we may look to book profits again. So at this point it was 200 points gain, probably will book at 200. That means we are booking at 4R and we are booking half the quantity again, means 1/4 quantity from original and half from remaining. We had 200 quantity initially, we have booked 100 quantity, 10,000 rupees profit is booked. Again we have booked 50 quantity at 200 and 10,000 rupees profit is booked. Now remaining quantity is 50 and that is left as it is. So we have total profit of 10,000 here. We have total profit of 10,000 somewhere here and 10,000 additional profit somewhere here. From here prices kept on moving higher and higher, and now let us see how much is the actual move. Total move is 1600 points. With 1600 points and 50 quantity, we have 80,000 rupees of profit. That means we could have been holding 80,000 plus 20,000, total 1 lakh rupees profit. This is all the hypothetical scenario we are discussing. We are discussing what is the effect of partial booking. Suppose we have kept stop loss below day's low because there was nice gap up and we don't want to lose much of profit. So in this case what will happen? Our profit will be locked, at least 1300 points will be locked for remaining 50 quantity. That means 65,000 rupees of profit. So if it goes higher, we will be able to make more points. If it crosses and closes above this, we may shift our stop loss somewhere here. So if we shift our stop loss to 1500 points, then we will be able to lock the profit of 75,000 and additional 20,000 profit from initial partial bookings. So this is partial booking. Normally this kind of trade management is advisable when it is just a reversal expected and we are expecting prices to go in trending move, but we are not very sure about it. Market has not given any confirmation and we don't want to lose our money. Therefore we do half position booking at 2R and at that time 10,000 rupees profit is booked. From there if our stop loss is hit, we'll be able to still keep some profit because we have exited half quantity. So remaining position, if it hits stop loss or loss, will be 5,000 in that, and original profit was 10,000. So we will be able to make at least 5,000 rupees. But from here, if prices continue to move higher, we have still some position left and we will be able to make profits on that. This is one mindset. Then there is another mindset which is called as pyramiding when the position is in profit. Suppose we have taken trade at this point and we leave the stop loss as it is. We don't touch it. Means we don't want to book our position because it is favorable and it has not given any signs that it wants to reverse. Therefore, when next day there was gap up, we are not booking anything. Then prices kept moving sideways and then there was nice up move. At this point we had taken risk of 10,000 and we have taken a position of 200 quantity. Same quantity because we are risking same amount. From here what happened, prices went up, and when there was a breakout of this trading range, this is a trading range. So when there is a breakout of this trading range, we can add into the position. And suppose we add here, for this position our stop loss will be trailed. We may trail stop loss at this level or maybe at this level. So whatever level we trail the stop loss, we will not lose any amount of money. Now as we have already bought 200 quantity, here we want to add small quantities in such a way that we will not lose more than 10,000 rupees. And in fact we should be able to make some profit. So maybe we will add some quantity here. Let us see. The close is at around 43,850 and this is 138 points of risk. So if here we want to take risk of 5,000 rupees, let us calculate the position size. I will show you how to calculate position size. So this is our entry level. From here risk is 138 points and we want to risk 5,000 rupees. When we press OK, we'll see quantity. Quantity shown is 36. So we can add 25 quantity here. Original position is 200. We are adding 25 quantity. Not much. Because if we lose here, we'll lose 5,000 and there will be some profit from this position. So let us see what happens. From here prices kept on moving higher and higher, and when there was this breakout, we can think of adding some more position. To add some more position, probably this will be a place of retracement entry, and on this retracement let us calculate position size again. At this point we are taking risk of 5,000 for this position also. When we are making profit on this position and this position, we are just taking risk of 5,000 rupees, which will reduce our profit by that 5,000 rupees. But we will have profit from this and profit from this. If we take risk of 5,000, our quantity comes to 53. That means we can add 2 lots here. So here suppose we have added 2 lots in Bank Nifty. Now again prices kept moving higher. We have added once and twice. So after adding twice, we will not add anything. We will just keep trailing stop loss. Now suppose our trailing stop loss is at this level. How much we will make at this point? Let us see. At this point, the gain is 785 points for second position. For first position, it is 1100. For original position, it is 1400. Now let me show you calculations. 1474 multiplied by 200, 2,94,800. Then 1182 multiplied by 25, because we had just one lot there, that equals 29,550. And in last position we had added 2 lots, 785 multiplied by 50, that equals 39,250. When we add these three, numbers, 2,94,800 plus 29,550 plus 39,250. This comes to around 3,28,300 rupees. So this is profit if we keep trailing stop loss and add when we have small opportunities in between where stop loss is small and we can add with minimum risk. This risk is taken on the profit. We are not risking from our capital. So actually we are trailing our stop loss on original position. We are not booking any profit and we are holding our position so that we can make maximum from this position. This is possible when the trending move comes. This is not possible in non-trending market, or this will not make good profits in non-trending market. Partial booking will make good profits when the market is non-trending. When the market is sideways, it is not moving too much, then that kind of trade management will help. When such trending market starts and we have already done partial booking, then it is really difficult to add at higher levels, because we know that we have already booked position and we had bought at lower levels. Now it will be difficult for our mind to accept higher prices and will not be able to buy, and it may continue moving higher and we'll keep booking our positions slowly. So these are totally different and opposite scenarios in which we can manage our trades according to market conditions. Now there are some people who do exactly opposite of pyramiding in profits. They pyramid when the position is in losses. So suppose they have shorted somewhere here thinking that breakout is failing and the breakout does not fail, then it goes up, they sell here again on gap up, prices come down slowly, they feel very happy, and again it goes up, so they get frustrated, they sell again here at top, prices come down but it again goes up. And some people do this for buying. When they have bought, prices are coming down, they keep adding positions. So it came down by some points, they have added, again it fell down, they added, and this is usually done by deploying larger capital. So this is good for investment purpose, this is not good for trading. When the position is in losses, one should not keep adding into losses. It will increase the losses in this way. Reverse pyramiding or pyramiding in losses is done when the position is in losses, and usually people add larger quantities. So initial quantity will be smaller, then quantity will keep increasing, and losses will also keep increasing exponentially. So instead of having 3 lakh rupees of profit, there will be loss of 3 lakh rupees. At some point it may be loss of 5 lakh, 10 lakh if position is increased every time, and capital may get stuck for long time. Many people do this for FNO also, and if this is done for FNO, then it will be very big disaster. Sometimes position may get stuck for years together and there will be lot of headache, lot of stress. I have heard about some people who had to sell their portfolio stocks, who had to take loans, or they had to take money out of their PPF accounts just to feed the money for this wrong pyramiding in trades in futures. So this is very disastrous situation. It should not be done for trading purpose. This is all right for investment purpose, because if our view is for long term, at some point of time we expect it will reverse. But when we are investing, we are deploying small capitals, we are not deploying full capital, and the small capital means at the most 5% of our total portfolio. So even if one stock performs badly, we will not invest more than 5% of our capital in that, and that will be acceptable loss. Just 5% amount is acceptable. But if it is concentrated trade, this kind of trade management will be very bad. So this is about pyramiding. You may feel that these calculations are wrong calculations and it is not possible to add. So I can show you my charts on which these levels are actually printed on chart, and it was possible to take trades with these stop losses. Actually here the position was even larger because stop loss is even smaller here. Just one candle stop loss, one could have bought just at this level with 50 point stop loss, and at that time instead of 25 quantity we could have bought 100 quantity. So profit instead of 30,000 it will be 1,20,000, and this will be more than 4 lakhs. But I have created this chart just for demonstration purpose. I have shared the chart where it was possible to pyramid. I have shared it in my Telegram group for doctors, and we are going to study this kind of pyramiding in campaign mode once we discuss about accumulation phases. When we identify there is good accumulation and there is nice spring, then we can start campaign mode kind of trading. So with this, we'll end this video. This is very important concept. If you like the video, please share with your friends and please subscribe to my channel. Thank you.